I think we need good regulation. I mean, if you go back to the crisis, it was a massive regulatory failure. So basically, there was very little supervision of banks. There were loopholes in the regulation. Regulatory requirements for capital were evaded, and many other things like that. So I think we need good regulation. That's very important. We cannot have a free market without a decent regulation, and that's the future of banking, I think. So the Basel III regulations are not going to solve everything, of course, because financial institutions are very clever at evading regulations, and also the regulators don't have all the information they need always. There are a few things which go in the right direction. So counter-cyclical capital adequacy requirements, which demands that you have more capital for banks during booms. More attention paid to liquidity requirements, because we have seen in a recent crisis there was big mismatch, very little liquidity. So basically you could very quickly be short of liquidity, and then you have to call the government and the taxpayer. The progressive intervention also is a good idea. It's an old idea which was in the US, has been in the US since 1991. But it's a very important thing, which is if you are less capitalized, you have more constraints. So for example, you are not allowed to pay dividends, you are not allowed to pay bonuses to the traders and so on. And I think that's important, because banks should not be allowed to pay dividends when they are undercapitalized.
Was the crisis not predictable for economists?
So with respect to economists after the crisis, it's true that economists had done a very good job at predicting the crisis. Also, I'm going to defend economists. In a sense, I'm going to argue that we didn't use enough economists. If you look at the literature, the research on banking, for example, in the last 15, 20 years, all the ingredients of the crisis were described. So economists knew that something might go wrong. You know, the maturity mismatch, the bubble, the loose regulation, and so on and so forth, the OTC markets. We had worked on that, but we didn't quite know the numbers.
Is society still listening to economists?
The economists are bearers of bad news, in a sense. They don't, you know, their numbers, their theories, what they observe is not exactly what society wants to believe. So for example, we don't want to be in a society where people respond only to incentives, and you want to be in a society where people are generous and they want to do the public good because they want it, right? Not because they are forced. But then, you know, sometimes economists say, you know, that doesn't suffice. You need incentives too, and that's an image of society that is not always pleasant to hear, but is unfortunately the reality. So,
you did research about the relationship between law and social norms.
Yeah, I mean, if you think about the incentives that people have to contribute to, for example, the public good and behave socially responsibly, you know, there are three incentives basically. One is just your own personal preferences. You want to do the good, the public good. Then an incentives, you know, if you get a discount on your Toyota hybrid car, you know, you have more incentive to buy one. And so it's just money, or the law is often jail or something like that. And then there's a social norm, or the social pressure, or sometimes a self-pressure on yourself, right? And it's interesting because economists haven't studied very much. I mean, they've studied, but not very much the concept of social norms. And we want to do more with that, and how it interferes with the laws and the incentives. So, for example, the lawyers often talk about the expressive content of the law. The expressive content of the law means that the law is not just a price for behavior, so, you know, a subsidy or tax like jail. It's like a tax. So it's not just a price for behavior, good and bad behavior, but it's also some kind of expression of society's values. So you basically, the lawmaker tries to signal something to society about what the right values to societies are. So that's the kind of thing we now have to embody into our analysis. Another related thing is what's called norms-based intervention, where you try to persuade the population as opposed just to giving an incentive. So you try to persuade the population to conserve energy or to pay taxes or more generally to behave well. So you try to change the norm.